Good afternoon, ladies and gentlemen. We just got a fresh bullish signal from my AI model, and the timing couldn't be more unusual. In tonight's stock market brief show, we are going to break down exactly what this means. We're going to map out some key levels, mainly in the S&P 500. We're going to re-hop into some signal charts, expected moves, and market conditions. I got a lot to discuss, and I'm trying to compress this in the shortest amount of time possible because I got places to be tonight, but I wanted to get this out. So if you haven't done so already, make sure to hit that thumbs up and subscribe to the channel if you haven't done so already. Let's get into today's show. All right, ladies and gentlemen, welcome back to the show. We're starting here looking at the 11 sectors that make up the S&P 500, and we're going to touch on this very quickly, right? The markets were rather flat. We saw a big down day the other day. It recovered. A lot of volatility is starting to enter back into these markets, both from the upside and to the downside. And well, after the bell today, we did have Amazon and Apple report, and it's not looking nearly as good as it was for, say, Microsoft and Meta. Amazon right now is slightly down in the after hours, recovering some of its losses. We'll see where that opens, but the expected move for earnings could bring us down to 178 to up and around 202, maybe in tomorrow's trading session. Apple over here is getting hit a little bit harder, coming down to its earnings expected move, nearing it around 203. The upper expected move was around 222. All right, let's hop into some of the signal charts going on. We're going to look here at sentiment. Now, this is the AAII Sentiment Survey, which stands for the American Association of Individual Investors. And this up here is the bull side. This down here is the bear side, and then we have a ratio. The interesting part that we've pointed out prior videos was just how bearish we actually are, and this is on a weekly basis, right? So this is multiple weeks we've been down in this range, and if you zoom out and take a look here, this is just looking at the bears, extracting just the bear survey. And what do you notice here? We're up here at about 57.5, which we've only been up here a few times really throughout history, and each of those times marked somewhat substantial bottoms in the marketplace, as you can see here on the screen. Now, does that mean that we are finally trying to find some sort of a bottom? It may or may not mean that, but sentiment right here and right now is rather bearish among individual investor. If we take a look here at the NYSE-McClellan oscillator, I've been waiting to see if we can see some sort of a bearish divergence, and we got one. However, it's not really all too big of one. I like to see them a little bit larger in size as far as more time that passes, but we do have a high and a lower high right here while the price action's kind of creeping higher. And you can see that if I just kind of zoom to the left over here, we're kind of reaching from a very big rip back into prior areas that were once support, and once support is broken, it has the potential to become support. So we're kind of nearing a place right now where you may think hey, if in an analogy form, you're climbing up a mountain, right? We're seeing this steep incline here, and the higher you get up this mountain, you lose a little bit of oxygen, and you gotta come down and regain some oxygen before making the next climb. If we take a look at the Sailor to Shift tool, we did have a buy signal just this last week, and we officially crossed over last week's high. So this would technically be the trigger. So there's an official trigger in the price of crypto, as we've seen a pretty big rip from 75,000 to 95,000. So continue to monitor and see how this looks. If we look at it on the daily time frame, you can see we kind of flagged out here, broke out, and remain above that rising 200-day moving average. And you can see here that we remain above the 50 EMA on the relative strength line between Bitcoin and S&P 500, and we're near pretty much all-time highs here as it currently stands. So pretty strong stuff as it stands right now after breaking this channel, after getting a little consolidation. Now we're getting these signals flip. We do have various crypto equities about to report earnings, so it would be interesting to see after earnings come what those charts then there look like. Now, another interesting signal chart is the S&P 500, S&P technology sector bullish percent index. And I'm highlighting the times here that we've reached into an RSI of overbought conditions. And when we get overbought, we can remain overbought. And well, we came to a very, very frothy oversold condition with a bullish divergence. We rallied all the way back up, making for a really nice move. And now we're kind of creeping into this oversold condition. So what does this mean? This is typically the area where you want to lock in some types of profits or update your stops, because you want to remember overbought can stay overbought, just like oversold can remain oversold for quite some time. Now, what I prefer to see is a negative divergence that forms here as RSI pulls in maybe a lower high and this puts in a higher high. Those to me are a little bit more concrete as far as a signal, but needless to say, once you're overbought, there will be a time, once again, that we come back into an oversold condition. So it's just more a matter of fact of saying, hey, when we were down here, it's not a time to get bearish. Is it a time to get bullish right here? Most likely not at this current moment. You want to see consolidations in price actions or pullbacks. If we take a look at the put to call ratio, 10-day moving average, this is crossed down through the 1.0 and 0.95. And this is typically a bullish signal, right? When you're down here, and you're crossing through 0.8, this is a time to be more cautious in the market. And when you get up here, this is when sentiment's rather bearish. It's a time you want to become a little bit more bullish. And we've crossed down through. That's more of a neutral stance here. So now we're not extended really on either direction, but as we cross down through there, you can see that the market found some relief and moved higher. If we take a look at the 5, 10, 20 timer, which is just looking at the 5, 10, 20 EMAs, we did officially just the other day get all of them stacked positively amongst themselves. The last time we had a crossover signal was right at about there, and that was an official sell signal just based off of the trending EMAs of the 5, 10, 20. We tried to recoup it here, but we couldn't, and now we're finally coming into this area. Now, I will say the price actions came very fast. So even if we start to pull back a little bit, right, and come back into the 20 EMA and we can hold that, it's not necessarily a bearish thing. That would actually be a little bit more positive because I will want to see this price action digest at some point. Now, something interesting happened from a dollar perspective. I know this isn't really a signal chart, but I'll show you here something very interesting from a correlation standpoint. The dollar came down to a very, very frothy level, and we were first to really hop on this and say, hey, this is where you do not want to be bearish the dollar. It's where you can potentially see a bounce. And we try to mark out a level where you can see a bounce to when, well, take a look. 100.5 was the level that we marked out. It was prior support, prior support, prior support. Once support is broken, it has the potential to become a level of resistance. So is it going to become a level of resistance? If so, it's going to be important as it's working off an oversold condition to know what's negatively correlated to the dollar. Because if the dollar comes down, don't you want to know what assets are going to do good in that environment? And this is very interesting here because I'm pulling up the correlations. So this is the dollar. These are 20-day correlations amongst different assets. So we have the S&P 500, the NASDAQ, the IWM, the Bitcoin, and China down here. And I want to call out that we actually have been in a positive correlated state here up until recently. We're starting to become more negative. You can see that rolling 20-day. So what does this mean? Well, as we're moving into a negatively correlated state, if the dollar were to go higher, it could put pressure on the markets such as the S&P 500, NASDAQ, IWM. However, if the dollar were to back off and head lower, we may be moving back into a negative correlated state where that's actually positive for the markets. Now, correlations, they come, they go, they change, they move, right? And they're on different time frames, they're different. So I'm just showing you the 20-day correlation, how it's shifting as it stands right now. This is the AI model that we shared on the last video, and a lot of people have been asking about it. It's really taking a look at, it's dynamically looking at multiple time frames, and it's using momentum and rate of change. And it does its best to really kind of figure out when the market could be a good time to buy, when it could be a time to get out. And I'm highlighting some of the areas here, and I'm going to show you a little bit more history on this one. But I just wanted to call out that it is starting to turn green, but it's also turning green. Why? Because we've saw a big run up. So is it the time to get super bullish right here? In my opinion, I need to zoom in and show you some key levels. And I want this signal to hold to be bullish, but I also want to look and map out some key levels because I'm not just going to enter blindly into a move that's already happened. But I will explain too what it is that I'm doing, not necessarily in the S&P 500, but various stocks that are doing well. So if I zoom in on this, you can see the last 4 trading days or so, we did flip over to more of a bullish signal. And this is the S&P 500, the SPY pulling into its year-to-date anchor volume weighted average price. We actually broke above that today, and we came back in, closing near the low of the trading session. Go figure, right? A strong move and into a level like this, you're likely to get some sort of rejection, some sort of consolidation. Now, if we start pulling back, even if we were to drop back into 530, I mean, that would freak out a lot of people because that's a large percentage point move. However, this was our first follow through day, and this was our first higher low. In fact, you can actually argue that this right here was a higher high. So in the very near term, you're seeing a higher low and a higher high. Meanwhile, for the year to date perspective, you do still see a series of lower highs and lower lows. So if we pull back, the main area that I want to be honed in on is holding this area right here in the S&P 500. So I'm looking for dips to buy. Well, I'm actually looking for strength after the dip to buy, but if it can hold this area, that is the place that I'm keying in on. Now, I also highlight an area up here, which happens to be the year-to-date close and then the prior area of resistance here. So I'm mapping out this little area that could act as a potential resistance. And if you remember, when we were actually down here on this specific day, I posted a tweet and I made a video too about it, saying I think that the pain trade from here is not actually to the low. I think it's actually coming back up into this area, back to around last year's closing price. And so far, I mean, that's pretty spot on because a lot of people have probably missed this rally, and the higher we go, likelihood they're probably hoping if they miss this for some sort of a pullback. And that's why I think the pullback and seeing the strength after is going to be very, very important to watch. I don't necessarily want to just buy the dip, right? This date doesn't look like anything here, but that was down about 2%, and then we closed at the high. So there's clearly some buyers here stepping into the market as tech has been saving us. But then again, right, our last two earnings charts are not looking all that strong. So it's going to be interesting. Maybe we get that pullback, we get some tests, and maybe we can see what happens here going into the rest of May here because we have a new trading month. Now, I wanted to zoom out and look at 2022 because I think that this is an important note on the buy signal. So this was the start of the bear market, right? 2021 going into 2022. And we got that signal right over here. It told us to be cautious. It told us a couple of times. And then we sold off. And then we started to get a buy signal in and around here. And it held all the way till basically here. So it wasn't necessarily a false signal. It's based off of momentum, based off of strength, based off of multiple time frames, and it started to firm up. And I wanted to call out that we were actually crossing back above a declining 50-day and a 200-day that was flattening. So an important note here is that the direction of the 50-day here is important to note because if you see a very strong move and it wasn't necessarily digested at all, you need to see what the strength then there looks like after. You can see we bounced up from the 50-day after coming back in, and we came back and the 200 cracked us back down lower, and we kind of continued this bear market in 2022. You'll see a couple of yellow candles on the screen here and then here. That's for another day, but this is just giving me readings of extreme bearish sentiment. And it tells me typically, hey, this move, it could be coming to an end, meaning that the move to the downside and or upside could be seeing its last leg, and we may see some sort of a fade in the market take place. Now, remember this little structure here, this white line. See how we actually cracked this high on the start of the bear market? Boom, and then we faded, and we were right around this bear crossover. I'm just pointing it up. Now, I'm not saying that 2022 is going to happen because I know some people are going to think that because I'm using this chart. It's more of just a way to prepare you for a potential path that we've seen in history. So what would that look like on this chart? Well, we had the bearish crossover, right? They call this the death cross, the 50-day. It's still declining. The 200 is flat. And remember, this is the start of the bear market, which we officially went into bear market territory. This was our first bounce, right? This was our second wave down. Typically bear markets, right? They have 3 waves, and well, we haven't had that yet. Let me fix my screen here. So what would that look like if we were to play out kind of like 2022? Well, perhaps we shoot and overshoot this area back into where that last year's closing price was, which we were kind of stating. And what would happen then? Well, the 50-day would start to float around, right? It would do something like this. And then that would be a similar path of what happened in 2022. So the important aspect here of why I'm bringing this up is because I wanted to map out those key levels right in and around here, right? How that kind of mimics the look of 2022, and people would get very bullish. They would say, oh, see, we're positive on the year. Everyone freaked out, blah, 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 blah. But you still need to watch carefully how we consolidate and where strength actually shows up. So in theory, to conclude this portion, I'm really bullish above this area, but I prefer to see pullbacks, right? Pullbacks and then strength thereafter. Now, how do I navigate this if I'm not willing to buy the S&P 500 at these levels? I'm looking at individual stocks, which we did on the prior video. We showed a bunch of them, and I posted a bunch in the Patreon group today because we're kind of nearing that gamma flip line, or we crossed above it today. We're back below it, but I'll show you the expected moves here in the market conditions in a moment. But now I'm looking for strong performing stocks that are currently building bases and getting very tight. The tightness in the stock will allow me to have a very clean risk to reward. Hey, I'm wrong here, but I'm right if it breaks out. Okay, so I'm starting to get my exposure back up as I sold from these levels up into here. I've sold that rally, and now I'm starting to add exposure back in, but in individual equities. And I just increased my equity exposure by 10% because I was pretty heavily handed cash position at the time. Okay, so I found that to be kind of interesting. I wanted to share that. Let's look at the expected moves going into tomorrow. Remember, we still have a lot of data coming out, and then we have the earnings tomorrow to see how the market settles with the big dogs that just reported. But the expected move is over $7 in the S&P 500. That could take us right up to the weekly expected move, and here to the upper vol range at about 567 to 566-ish area right in here. Screenshot it, put them on your screen. And if we were to come down to the lower implied move, this would actually just bring us to basically flat, right? From a week to date standpoint, that's where we closed last week. That would be what the market's pricing in. And that would be right around the 5-day moving average. It'd be right around the week to date anchored volume weighted average price here too. So I'm not really too worried if we pull back in these areas. What I want to see is strength thereafter to maybe enter in to some more individual names and or get a little bit more exposure back into the S&P 500. If we start to see wicked sell side tomorrow, I mean, we're still well within the market's expectations to tag either one of these expected moves. Seeing how Apple's kind of trading off and Amazon's trading off, we may come to another week where we don't actually tag a weekly expected move. So it's going to be interesting to see how that navigates. Now, overall, let's look at market conditions. We're still above rising 5-day moving averages. That's positive. We're coming into these year-to-date volume weighted average prices. You can see SPY Qs. IWM hasn't tagged yet, and you want IWM to see some strength. That'd be a positive sign. Semiconductors, biotech, right? DIA, these haven't tagged, but yet these two have, which is S&P 500 and the NASDAQ 100. If we take a look at the VIX curve, this is why I'm not very excited here as the market kind of pressed higher today and the other day, is we're still in backwardation. And in short, what does this mean? It means that we got problems here and now with volatility, and we see ourselves coming out of it in the future. Now, I think that this is going to change if we can actually get above the gamma flip line, which we just did today, and now we're more at a gamma neutral standpoint, but yet we are still negative right now. So the conditions of the market are improving. However, we're just in this zone where they could change to being bad just in one quick hit again. This is the all-time high anchored volume weighted average price, and we're above that. That's a positive sign for the SPX. And then you can see this white line, that is the year-to-date, which on the SPX we have yet to tag as it stands right now. And if I take a look at some of the net gamma exposure, 5650, traders are reaching up a little bit here. We have 5,600 now, which is kind of where we're at, and not much beneath us other than 5,400 and 5,200. So if we start to slip off into no man's land, just watch 5,400 as another potential level that we can see some supportive action at. And if we really start cracking, I mean, obviously it goes back to the 5,200. But as it stands right now, there's not much in this area, this pocket between 5,400 and then 5,600. So a 200-point kind of open range, which can leave a lot of room to interpret. So it's going to be important to watch how price digests and handles the digestion moving forward. That's all I got for you on today's episode. Hope it helps out. I'll see you on the next.